You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution in trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again, one final time here for 2020. For Volatility Views, the premier program for volatility traders. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Coming at you a little bit different than our usual time. Obviously, Friday is New Year's Day. I'm not a monster. I'm not making people come in and record a show on a day when the markets are closed and it's a holiday and everyone is going to be probably watching a lot of TV and digesting and recovering from the night before and looking ahead to hopefully a glorious year that is 2021. So we're doing this a little bit early, doing it on Wednesday this week. Remember, keep those reviews, keep those comments coming. We do love to hear from you guys on all the various platforms where you guys listen to the program and enjoy it. Play along on our polls over there at Options. We got some good stuff going out there right now, actually, if you want to play in our end of the year extravaganza. And speaking of end of year extravaganzas, wouldn't be fun if I was just doing it by myself. No. Let's go out and see who's joining me today. And for our end of the year palooza, our look back on the dumpster fire of a year that was 2020, I have none other than the dyed-in-the-wool Maine cynic himself, the rock lobster, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of Carmen Line Capital. Mr. G, welcome to Volatility Views one final time for 2020, sir.
It is good to be here. It looks like I drew the straw for the Wednesday show, but You know what is funny, Mark? Was there any volatility in 2020? I'm scratching my head, and I can't put my finger on any activity this year.
Maybe we should just end the show now. You're right. There was not much to talk about at all. This is kind of a boring. This is almost about a repeat of 2017, where VIX barely budged out of the single digits all year. Right? We didn't really have much to talk about. So let's just end it right now. What do you think?
I don't think the listeners are there. I don't think they're going to learn anything. There's nothing that happened in 2020.
There's nothing to analyze, no case studies to be done. We'll soldier on anyway, listeners, into an extra special volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, we have a lot to get to. We have an entire year to break down from a volatility, trading, and trending and analysis and all sorts of weird perspectives, and there were a lot of them. But before we do that, let's set the table one final time. Mr. Rock Lobster, if you choose, I will give you pride of place really quickly before we dive into the maelstrom that was the year. What is lighting up your tape right now? And if you want to take your glasses off, what is Volman keeping an eye on for in the markets right now, sir?
So I have to take my glasses off and put on my red stick outfit?
Yes, exactly.
You see a lot of FinTwit and the VolTwit. I guess there's VolTwit. I don't know. I don't really post more than once or twice a week when I see something interesting.
I saw you were dragged into a Bitcoin debate the other day on VolTwit/FinTwit. So the people are getting at you, sir.
Yeah, but he was actually he was like, oh my gosh, the Rock Lobster's following Bitcoin. Listen, I don't have any stake in Bitcoin, and it's at this point I had some of my students at Option Pit 9 years ago. Like we're buying thousands and thousands of dollars worth of NVIDIA chips to mine Bitcoin. But okay, get this though. When they were mining them at like $30 a coin, $40 a coin, $50 a coin, stuff like that. And they're spending, I don't know, whatever, they needed all the server horsepower to do it. And they're spending $300 or $400 an NVIDIA chip for one of the big.
Did they hopefully at least hold on to some of those Bitcoin, or they dump them all at like 100?
No. They, as far as I know at least one of the people who are doing it started a Bitcoin fund. So he did okay. So who knew? It's just like a lot of stuff you look at, it's a thing, and then holy crap, it's really a thing. So. Where does it go? I don't know. Where does it go when they've mined all 21 million Bitcoins? Like, then what do you do? Is that,
straight to zero, says the Rock Lobster. It's all good.
Oh, gosh. I'm curious what happens to it as a thing after that, because there's a lot of, there's anticipation and things like that. So, interesting, it's interesting. So anyway, I see Bitcoin, but I think from a vol point of view, it does make an interesting sort of proxy for, the U.S. dollar, how stable or unstable, fiat currencies are. I remember my first Bitcoin moment where I thought, wow, this could be a thing as an indicator. Do you remember when I think Cyprus went bankrupt or something? It was 2012 or something, 2011. I'm trying to remember.
Good times, yes.
Yeah, they were like, and all the Russians were mad because their money was in Cyprus, and it was like a big old mess. Because it was sort of outside the EU, but not anyway. But all I remember though is Bitcoin went from 30 to 60, I think. Not $30,000 to $60,000. I think it was $30 to $60 at the time. I'm like, wow, So I think one thing is that obviously there's the FOMO thing kind of going with where Bitcoin is now, but also people are looking for alternatives to stocks and bonds and everything else. Because ultimately, once you're starting to spend $25,000 or $30,000 for something, there has to be a little bit of appetite outside the normal, and out of what we'll just call it normal investable universe. So as that, at least, I mean, it's a pretty good, it's an indicator of all the madness that's going on with how much printing is going on. And usually that market indicator tends to be, it can be, accurate over time. So we'll see what happens. Maybe just everybody thinks dollars are worthless, and Bitcoin hasn't really changed in value. It just hasn't been. It just the dollar has depreciated so much relative. So although that would be a pretty big number. But anyway, you get the idea.
I did not expect the first 10 minutes of our Vol Review to be devoted to Bitcoin. I guess that shows what the year was, a mad year that was.
Yes, it is. It is a mad year. But it is, I think, it is an indicator of vol, basically. I think, when Bitcoin was kind of receding in value and everybody's like, everything's cool. Remember the beginning of the year, Bitcoin, I think, I'm going to say it was pretty darn cheap. I don't really have any Bitcoin graphs in front of me, but I seem to remember being $5,000-6,000 at the beginning of the year. Is that right, per coin?
Yes, it was well shy of where it is right now, threatening the 30,000 level. It's up about almost 300% on the year. Right.
Okay. So it was relatively at the beginning of the year. You had it's hard to remember year in review, right? There was the it was the Ukrainians, and there was the impeachment, and there was all this stuff, and this little thing happening in Wuhan. We're like, oh, what's going on over there? And Bitcoin was what, $5,000 or $6,000, and now it's not. So. And I really changed. So again, as a proxy for vol, I think it is like currency flows and stuff like that. It is, there is something there, but I don't, as a trade, I don't really watch it. But anyway, now as we spill into vol, I just think we had the highest printed vol ever this year, right? In VIX.
We did. We'll get to all of that. We're going to have a structure to this. I know you want to dive into a Bitcoin rabbit hole, sir. But
I did. Well, and it's not like I'm a Bitcoin bear or anything, because, put it this way, I have no interest in getting in front of that freight train. No interest in getting in front of that.
Definitely don't want to short it at these points, at least not straight up with the futures. The options may be a different story. Speaking of different stories, let's get into how the story of volatility and indeed volatility views evolved over the relatively quiet and tranquil year that was 2020. We kicked off the year with this program back on January 3rd. Oh, how different the world was nigh on a year ago. Coming into that show, you think maybe sleepy first couple of days of the new year, quiet times to kick off. Nay, I say, listeners, it was actually a tumultuous kickoff to the year. Right around that time we had, in fact, I do believe we titled our episode that week, Assassination Volatility, because we had the assassination of the Iranian general there on the airport tarmac, effectively, with a drone, sparking off potential for a conflict, escalating tensions in the Middle East. We, of course, were still in. Everyone forgets, still are in, but we still were in at the time, a trade war with China. And, of course, in January, impeachment. Anyone remember that? Nobody remembers it now. We've had so many other more insane things happen since then. But back in January, there was a small delta, but still a delta, that we would have a change in presidents and not through an election. So these are three huge things that were lingering out there. And how was vol setting up to kick off the year on our first show of the year, where spikes and VIX cash were both right around 13.25 to 13.5. Now, looking back, you might say, wow, that's nothing, vol. I'll buy all that all day long. Of course, hindsight always 2020 here. VVIX was at about a 91. So the vol of vol was starting to get elevated. And we said before, watch that indicator, keep an eye on that. When that starts getting frothy, things are starting to pop off. But still, in hindsight, given all the things, even obviously pandemic still wasn't really on the mainstream then on January 3rd, the beginning of the year, but still just all those other volatility elements, all those other shoes waiting to drop. You think that could translate into a little bit more juice, but yet that's where we started the year. Mr. Rock Lobster, I know your memory not as good as it once was, but can you dial your own personal Wayback Machine to the beginning of the year and think back to those halcyon days of volatility where all we had to worry about was the assassination of a foreign general and a trade war and perhaps the removal of a sitting president, sir?
I know. Exactly. I'm looking at Jano 2. VIX was 1247. 1247.
You think impeachment alone could tick in, I don't know, a point?
I think there was a little bit of something, but the market they're like, here's the funny thing is equity buyers were basically fading that from the get-go because, the Senate really wasn't going to shoot themselves in the foot. And maybe everybody knew it was about Hunter's laptop back then. But it's funny, it never showed up a year ago while they were going through the impeachment. But, it's around now. But we'll let that sleeping dog lie. But when you look at the vol and all the stuff that was going on, and what's funny is I was actually looking through the volume, and I did not see 50 Cent was not quite present in the beginning of the year. I was looking at the open interest, and he wasn't quite there yet on January 3rd. I was looking for the April cycle. I don't think he showed up until Feb. He or she, I think they were outed as a he, but anyway, I'm looking at some of the strikes here, and there's upside vol in there, but I don't think 50 Cent had reared his head yet. So if we're going back to the early days of January, the time of milk and honey before all this stuff, hasn't been, and there was a bit of a bid for vol. So the Jan vol in the Jan 22 cycle was 95. Jan in the March cycle was 70. So the two-term vol was about a 70. And right now the March vol is 94.73. Just to give everybody a bit of a relative price view. We had a 12.5 VIX, and we had a March vol was 70.73. And, only a couple days difference. VIX is almost double that number. Actually, it's almost exactly double the number. But March volatility is 94%. So just for your listeners to keep that in mind when Mark was saying VVIX was higher, it is a lot higher still. Like a lot. Like just everybody getting my 24 vol was not a normal vol. Everybody's punch drunk now at 24. Because of the COVID thing and this and businesses and restaurants and whatever, you can list off the issues, right? But vol, I think even in the back month is still very high. So when we go back in the time machine at a 12.5 pre-COVID, which is kind of how the market normally rocks, vol is still very high, and it's high out on the term structure. We can talk about the term structure a little bit, but the juice is there. It is really pricey. And I was looking with some of my students in the Vol Trade Club, just trying to create a bit of a curve steepening trade, with Feb and Jan coming in and sort of maybe March hanging. But damn, it's hard to price something to make money. If you're an option buyer with vol products, which in general I am, buyer and spreader. So when you look at the pricing, it is just say interesting and still very expensive. And when we come up with these subjects, you can't make a case for the realized vol anymore in SPX. SPX is, I think, about ready to cross an all-time high. If it's not there again, we don't have Tuesday here to remind us, but it's pretty darn expensive. So you could put your tinfoil hat on, Mark, and figure out the grand poobah of the options of vol views. But why is that vol so high? And then again, why is the term structure so darn high? Out in VIX, you have a very flat but elevated curve as well. So there is a bid for vol still. Deep into this COVID cycle, 3 vaccines have been approved, pretty much in the EU now and the US. And they're not. I do have some speculative ideas on why this is, but the vol hasn't come in. That's the simple thing. It's still in and out of zone 4 on a daily basis, and it has not broken into zone 3 in any big way. So, my rule is when it's in zone 4, close to there, anything can happen. one match, boom, and you have super tinderbox. So, I would just tell people to be aware of that. And because nobody is, I just don't think people are selling options anymore. I think there's a lot of option buyers, a lot of vol option buyers.
Didn't you hear it's not fashionable? You got to buy the one lot. You can't sell them, sir.
Exactly. Well, I think too, with a lot of individual investors in the market, it's a lot of one lot here, one lot here. I mean, I know we're dating ourselves from the .com boom, but it was the same thing. Just endless 1-2 lot buyers, like endless. They never sold an option. And it worked, right? Because .com stops went up and they all made money. And hopefully they didn't get too creative and start selling puts at the top, but a few people did. But I think that's just where we find ourselves from vol land. So I think the 1 year picture is we still have much higher VIX, and we also have vol is very high. Because just looking at the March VIX number from January, there was no bid for vol there. Like the March 30 calls were 40 cents back then. So that's just it's a total different term structure, total different vol. And to be frank, I thought it would be over a lot earlier than this, but it's not. So I've had a lot of vol puts go out worthless this year. I have to say, the vol hasn't come out yet.
We all live and we all learn, sir. We're not even through January yet. We got to roll in through January. So our next show that we decided to focus on, listeners, because it was emblematic of an interesting turning point in volatility. This was later that same month, January 24th. And this is where we really started to see a little bit of that worm start to turn, not the aggressive turn that we saw coming in the next couple of months. Spoiler alert, there's more to come. But here in late January, particularly our show on January 24th, we noticed markets starting to get spooked by the pandemic fears. There was talk about coronavirus infecting, quote, 350,000 people in Wuhan alone. That number seems quaint now when we have almost that many deaths here just in the U.S., so a very different frame of reference now than it was back on January 24th. China was starting to lock down cities over there, and they were building new beds. All of that was spooking the market, so we were starting to sell off, even with all that. So January 24th, we were just coming into the impeachment. The vote didn't happen, I don't think, till about February 5th, so we hadn't finished with impeachment yet. Still had the trade war, still had those lingering Middle East tensions, and we had this virus starting to loom. And still, vol had ticked up, but not in enormous amounts. So we saw VIX cash and spikes both at or around 15.5. They were up about 4 points from the show before, so it took a little bit in Jan for the vol to start ticking up. VVIX still at a similar level to where it was a few weeks ago. It was about 97.5 this time as opposed to 91.5. So that ticked up about 6 points. Not a huge jump. This was also the period where we finally saw the last of the lingering lawsuits over VIX manipulation get dismissed by a judge here in Chicago. We won't belabor that point. Anything else you want to add here on the late vol worm starting to turn, sir, before we get into the meat that is February and March, Mr. Rock Lobster?
The only thing I'd add is I think the back month VVIX was still relatively low, where everybody was living in denial. And I think 50 cent had crept in by now because I'm looking at the March quarter, open interest on the March quarters, and we'll go through the show. But they open interest for 146,000 contracts on the 24th of January.
There you go. A good frame of reference for how the OI was starting to shift. Now we're going to shift down the board a little bit. We're going to jump out about a month. We're going to go out to our show at the end of February 28th to be precise. So we saw the vol worm stay well south of 20 for most of the next month after that last show until, you know what happened, about February 20th when the worm really started to turn. By the time we hit this show, February 28th, the numbers were in and they were shocking. And, of course, there was more to come. I mentioned here on the show back on February 28th, last time we were on the show, it seemed like the pandemic fears were behind us. Oh, how wrong we were. That week was pretty much historic by just about any measure. For the Dow, it was the 5th worst week of all time. It was following such notable weeks as October 10th of 2008 and everyone's favorite, May 17th of 1940. And so it was the quickest decline into a correction from a record close ever for the Dow. The S&P at that point was off 10%, so it was officially in correction territory as well. It was almost 12% decline for the week, one of the 10 worst weekly slides the index had ever seen up until that point. NASDAQ was off about 10.5%. It was the 8th worst all-time for NASDAQ there as well. How was vol shaping up at the end of that month? Well, a little bit higher. Let's just say the spikes and VIX were both a little bit north of 46. 46 3/4 for spikes, hit a high of nearly 49 on that show day. That puts it up, a whopping 33 points from the week before there, listeners. And VIX cash was at a 46 even. That was up 32 points from the week before. Where was VVIX? I mean, we always just talk about 120 as, okay, that's where you got to start paying attention. That's where things are frothy. That's where things are popping off. It was at a 126 on that show. That was up 28 points from the last show. So things were starting to turn. The worm was starting to turn. Vol was now at a range that we recognize today. It seems a little bit more recognizable out there. Mr. Rock Lobster, what are your thoughts there? February 20th is around that time everyone really starts to think of, the worm starting to turn. And by the time this show came on at the end of February, things seemed like we were in a different volatility regime, sir.
We did. We were well into zone 4 at a 40 vol, which we have not seen. Remember when we had the vol-apocalypse? I don't even think we saw 40.
No, in hindsight, it seems like exploded to 80, right? But it didn't.
Yeah, it wasn't even close to that, actually. When you look at actually the vol-apocalypse spike and the spike to COVID, I mean, it's like a mountain and a molehill. I can't even imagine if there was XIV for that. So I guess there was something to that thing where the SVXY and XIV definitely caused a bit of a cascade. I think Mark has good theories on that one, but I think that those are actually somebody kicked the hornet's nest over on purpose on that one, but that's another subject. But real simple, March quarters, right? Open interest now 252,000 contracts by March. Open interest going up, not going down. Value of the options have now blown up, multiple fold from 50 cents, which is his name, to $4.40, and no signs of backing off. And that's actually, there was even more open interest as well. So the vol buyers were still holding on to their contracts at a 40 VIX. Which tells you something. They were holding on. And usually people hold on for a reason. So I guess now the story will get richer as we move forward.
Richer, more insane. Choose your adjective of choice because they all apply. I think March alone, you could just peel off March from this year, and that is an entire week of shows that is going to be case studies for decades to come, historical, academic analysis, all of it going on in March. We decided to pin our eye here on our episode in March from March 20th of that year, so kind of after the Great Nadir, and we started to see some turbulence, I think to put it mildly out there, some swings. It wasn't all just sell-off anymore. But still, interesting stuff. Coming into this show, we were struggling to find the words to really encapsulate what the hell was going on in the markets. We had just seen the great annihilation a few weeks before. As Andrew put it very succinctly on the previous month, people had 40 calls in VIX and they weren't letting them go. That was a great indicator, if nothing else, that things were aflame for that month. But getting into March, of course, we saw huge sell-offs. And then by the time we got into the show, the market had rebounded about 20% from the lows already. So things were just insane. That's kind of where we found ourselves. Coming into this show, the Dow was up about almost 4,000 points, 21.3% from the close that it had the previous Monday there. So that alone, you're like, what the hell's going on? California at that point has started to lock down. New York was locking down. They were banning employees from going to work. Yet this was the first we started to see of this. Very dire news coming out of the pandemic, and yet markets rallying into the teeth of this. We saw also what can only be described as absurd levels some of these vol products across the board. TVIX, so I remember that one. It hit 969 on the 18th of March. VXX hit 77. VXX 77. Everyone who's fading it south of 20 now, they're probably just licking their chops saying, oh, God, I could have got in on the 50s on VXX back on March 18th. Yeah, they all hit those levels back then. Coming into this show, spike 63.5. So up a wee bit, up 16.5 points from the previous show. VIX Cash at about a 64, up a similar level. Our buddy, the Flowmaster, was cranking out there that VIX just set a new all-time closing high of 82.69. That was back a week or two before on March 16th. That passed the previous closing high of 80.86. That was set back on November 20th of 2008. So insane times. VVIX, what was the vol of vol and all this madness, you might ask? Well, it was 188.75. Get this, up 62 points from the week before. Just insanity. Spike options, they were still trading pretty hot and heavy back then. Even people think about, without the spike futures, that kind of what they've been of late, which is not many contracts, a couple hundred contracts open out there. But back in this maelstrom, they were still trading hot and heavy, even without a spikes future. In fact, someone came in and bought 100 lot of the April 130 calls, 130, and they paid $120 for these bad boys. So they dropped, about 12 grand on a flyer to the upside in spikes. Spoiler alert, spikes didn't get that high. But still, we saw some crazy. Also, there was the size 1x2. Mr. Rock Lobster was just talking about our friend 50 Cent out there in VIX options. Someone was playing with a pretty size 1x2 in spikes options as well, as you recall. Listen, it was in April. It was the April 1725, 17,700 by 35,500 times. Spoiler alert, that one worked out. Selling one, buying two. And yet also, interestingly enough, if you start looking at VIX options, we were rallying. So the top contract, the top sizable position in VIX at that time was 183,000 of the weekly, expiring April 1st, 23 puts. So maybe the fade was already starting to kick in, Mr. Rock Lobster. Is that your takeaway as well?
It was, but I wanted just so that week of the show was also VIX expiration, that March expiration cycle. That was the 50 cent expiration cycle. So what's funny is when you go through the open interest. So remember we started highlighting the options around 50 cents, and they went to $4.30. So the open interest on the 17th, 3 days before the show, was still 192,000 contracts, and they were trading for $45. So you do the arithmetic.
Wow. That's why he hasn't come back, sir. He's done. You know what? It's one of those things where, he doesn't have to go to an island. I'm sure he bought one. The island came to him at that point. 50 cents to $45. I call that a win.
Yeah, that's and not a small amount, right? Look close to 200,000 contracts.
I think the technical term for that is dang.
Yeah, that's definitely a big one. So anyway, so that's just, and also for your listeners, how much or how expensive did vol get, right? Or how expensive did options get? So when you look back, you also want to say, okay, this is all well and good, and you're giving me these vol numbers, but how expensive were the option numbers, right? What was the 60 put? Let's say the April 17 60 put at the time, right? Was not nothing. Okay, the market was $4 wide, and it was $12 a contract at that time
for the 60 put.
For the April 60 put in VXX.
Oh, I'll say VXX. I was going to say, wait a minute, I missed something there. Okay,
and the VIX contracts were actually very expensive as well. Like everything was very backward.
See, that's why I pointed out about the level of VXX, because people might think, I was at 77, I could have scooped it, but $12 for the 60 put? I mean, that's untenable for most of our listeners, I would think. Right. A pretty expensive thing. And I think, a couple of days later, I think the vol was moving, right? And even in April, at 75 put in April in VIX, right? That straddle, the April 75 straddle in VIX, which essentially at the money was $30, right? So the future is messing things up a little bit, but it was a $30 straddle. So even then, you have a $75 product with a $30 straddle.
the vol, let's just say, and that also had come down. So by showtime when you did the show, vol was a little lower, which I found pretty cool. Anyway, but like you said, vol VVIX was 200 plus, and that's saying something for vol.
That's saying something. Do you know what else we were saying? We were saying, what the heck? Because back in March, that day, we had long anticipated Mr. Rock Lobster as floor traders back on the CBOE or your days on the P Coast or wherever the heck else you traded the Inuit exchange. The days of floor traders going the way of the dodo happened back in March. All the exchanges shut down. They went fully electronic. Insanity. So factor that into some of what you're seeing in the markets there in terms of width and breadth and everything else. So SPX, $0, first time ever in their history, they were fully electronic. They were Fed talking about unlimited asset purchases. The previous limit was somewhere around $700 billion. Fed also talking about maybe 30% unemployment. And we saw big firms in the market making space like Ronin going the way of the dodo. So crazy time. Still, we started to ask you guys around that time, back on March 18th, a couple days after the Great Nadir. We said markets are melting down. Volatility is skyrocketing. What are you guys doing at this point? Are you short and riding it down? Are you starting to nibble at long positions? Are you sitting at cash until it blows over? Almost 54% of you said you were starting to nibble at long positions. So if that's the case, if you were doing that and back in March 18th, I dare say you probably worked out pretty well. Of course, that's kind of flies in the face of pretty much every other poll we did of our audience this year where you guys are fading this rally pretty hard. A week or so later, we asked you on March 24th, the market's back in rally mode, surging 8%, racing past 2,400. Oh, how distant that seems now in the S&P. We asked you guys quite simply, does this have legs or is it a dead cat bounce? 73% of you said it was a dead cat bounce. We'd be back below 2,400 by the end of the week. So a lot of fading going on there. Also, Mr. Rock Lobster, sounds hard to believe. I actually went to a conference this month. It was pretty much the last conference of the year, and it was the Vol conference. It was the CBOE Risk Management. Go figure, wasn't as much talk about selling and harvesting of the risk premium this year. I wonder why that was. Usually this year, every time you go to that show, it's just, hey, look at the glory of selling puts. This year, not so much. And March also set a new record all time for the options industry. It was up 63% from the year previous. 568 million contracts cleared at OCC. Listen to that number. Remember that number because it's going to get higher. All right. Let's keep on rolling. Next show, we're going to stop at our next waypoint on our volatility journey. We got to get rolling. We're slow journeyers today. Is April 17th. So we saw a bit of a rally in the markets there. People were wondering about maybe is there a cure? Some good news coming out of Gilead as a result of their treatments. Where were we in the vol scene? Spikes was at about 39, down about 10 points from our previous week before, and well off what we were just talking about in March, where Spikes and VIX were both at 46 even. So off quite a bit. And then we also saw VVIX at about a 127, so a far cry from its 188 levels previously, and still another 18 points down. The VIX futures curve was still juicy, still backward quite a bit, despite all this talk about remdesivir being a cure. The top positions in VIX now, the top position was 148,000 of the May 35 calls, so still upside, but perhaps a more relevant and reasonable strike out there. VXX was shy of 40, 39.6. The top position in VXX, by the way, this time, 96,000 of the June 45 puts. So those were certainly in the money at that point. Mr. Rock Lobster, what leaps to mind for you in the month after the great madness of March, sir?
I think, well, when you look at this, and also the vol was down, had reduced by 50%. It's cut in half, basically. It's into the hundreds, right around 100. Also, a lot of the open interest was kind of interesting. You look at the May cycle, there was a lot more puts coming around by then. So I recall this was sort of the calm before the storm, and I recall this being more of it's not catastrophic, right? Everybody thought because all the hospitals would be overrun, it was mostly just New York. That definitely, they had their share of cases for sure. Like they had the most of anybody. And I think that set the tone for early on for all this. And then things kind of settled down somewhat. So the market stopped going in two directions, basically. And that's when the vol came down. And that's what I remember most. It's like, as long as that, 1,500 SPX was still in everybody's mind, or 2,000, the vol kept going up. And then once markets stopped going down and we really how much downside was there? The Fed kicked in a little bit and tried to backstop and all the stuff that they did to kind of keep the capital markets moving. And that's when the juice came out of the vol and the market started to right itself. So, and I think this was probably for SPX, probably a low point. I know VIX got a little higher at least once or twice, but I think as far as SPX goes, I think this is pretty much about as, it's been straight up ever since.
Yeah, I also should put out there, April is also the month we saw the madness that was negative crude oil. We'll get into that more a little bit later today on TWIFO listeners. Also, when OIC was scheduled to go on to Puerto Rico for sunny OIC, and not so much that month. May, we got to VolViews 400, May 22nd, a milestone for this program indeed. Remember, this show premiered way back at August 16th of 2011, listeners. So came up on episode 400 this year back in May. So that alone was worthy of note. At that point, the markets were pretty much already back or almost back to their pre-corona levels. Yet we're also starting to see a lot of dissonance, consumer sentiment still very weak. So a lot was going on. What was happening with those two things? Spikes and VIX, both at about a 30. They were down about 3 points from the week before and down substantially from the previous episode we just profiled. VVIX at that 120 level, that kind of became the barometer for the rest of the pandemic year. 120 was kind of it, and we kind of been around that level for most of the year. We had a brief period where we broke ever so quickly below 100, but VVIX has been triple digits pretty much all year and mostly around 120, if not north of it. The top VIX position out there was the June 50s now, back up to a more, shall we say, optimistic strike. 125,000 of those. Obviously, a lot of OI come off the table as well. VIX futures were back to a relatively normal contango. Our audience were still fading this rally. We asked them back on May 18th. VIX just broke through 30 again for the first time since the pandemic started. Were you guys buying this decline in vol, or were you thinking it was pretty much just the calm before the storm? And you guys, 45% saying it was going back the other way. It was going to be higher, over 35 within the next month, and only about 20% saying lower, below 25, 26.7% saying right where it was, 25 to 35. I'm going to add another month in before I toss you, Mr. Rock Lobster, because we're kind of coming up against it here. But let's go to June. June was another mixed end to exchange week. This was June 19th. This particular show, kind of a weird week. The Bulls or Bears are both kind of fighting it out that week. VIX and Spikes are both at about 33.5. They're both down about 6 to 7 points that week. VVIX back up to about 137. But still, even though it was up, it was down 18 points from the week before. So VVIX had gotten frothy again in June. The VIX futures curve kind of back to a mostly reasonable level. People were starting to eye that election premium in there again. The top position out there in VIX options, 160,000, so a little bit more this time, of the July 25 puts. Now we're getting back to the fade, where it used to be all calls all the time. Now it's puts dominating the top. The XX, if you wonder, was at about 36 3/4, down about 6 points from the previous show. And the top positions out there, remember that sizable it wasn't 1 by 2, it was a straight up put spread. It was the AUG 3022 put spread up on for about 100,000 contracts. That was the big trade out there, and that was a pretty good winner as well. Mr. Rock Lobster, what leaps to mind for you for the madness of the middle of the year, sir, May and June?
I think May, June, mostly the June, I think, was a surprise because there was an assumption that, hey, went through the 6 weeks, the hospitals didn't get overrun, and we thought we'd kind of start getting back to normal, and then it wasn't. And we had that, do you guys remember you had that huge spike in like Boeing and the airlines and all that, a huge spike in prices and equity prices, and then the plug got pulled in that whole industry, and it basically went dark for the next 4 months. So I think if anything sticks out in my mind, it was that second surprising vol spike in the June cycle that I don't think, it's like 2020 was a year. I'm not sure many people saw that coming. I think people were expecting a return to normalcy a little faster.
That is the case. Let's see if that normalcy persists out to July. Now we're going out to July 10th, listeners, so right on the heels of the U.S. July 4th holiday. Another mixed week. The markets were pretty much trending lower all week, but then some good news, more good news out of Gilead at the end of the week seems to be turning into a rally. At the time of that show, Spikes and VIX are both at around a 28, down about 6 points from our previous episode the week before. VVIX south of 120 now, 112, down 20 points from the week before there as well. VIX futures no longer backward there, so not a lot of juice in the front portion of the curve. The number one VIX position, again, getting back to that fade, the July 25 puts, open for size, 134,000. Small size, not a lot for the number one spot in VIX, but we saw some anemic OI in VIX throughout portions of this year, listeners. VXX was down to about 32 3/4, down about another 4 points from the last show, and that put spread, the 30-22 put spread, was still the size position out there in VXX land. We also on that show talked about some interesting trends in the vol landscape. DC, the new mecca for volatility traders. Who knew that? Coming out of Google Trends. And then let's roll on into August here. August 28th is our next stopping point here on the show. Markets were ending the week slightly green. Yet another weird week. That was the period where the Fed said, yeah, inflation, we're not going to pay attention to that anymore. So that certainly turning the markets on its head a little bit. Spikes and VIX cash both at about 24, actually both exactly 24.5. That's interesting. They were both at the same level. Both up about a couple of points from the week before. VVIX at about a 117, so kind of staying frosty compared to the previous show. We're starting to see the futures, similar levels. That premium on the election, though, was starting to get really juicy. The ALK future in particular was 7-point premium to the cash. The no future, 5.5 points premium to the cash. So a lot of juice out there in the farther, well, not that much farther anymore, a little bit farther portion of the VIX futures term structure around the election. The top VIX position as of this show was the SEP 20 put, 144,000 of these, and the VXX was at 26.1. It was actually up 1.25 from the previous show. The top position out there, that put spread had rolled off the board, and it was now the SEP 20 puts for 36,000, as well as SIBO launching the mini VIX futures, and NASDAQ and CME announcing the launch of VolQ. So July and August were eventful periods for vol in and of themselves. Mr. Rock Lobster, what caught your eye and what resonates with you in that period, sir?
This was the one, I think this was the more difficult period to trade. I think you just had to be long, basically. You're just long and kind of vol didn't do, it just, I don't recall it doing a whole lot. It just kind of stayed up there. It was kind of bouncing around back and forth. And I just think this is one where sort of the Qs and stocks just started that steady ascent, but the vol just did not come in. Or it came in very slowly. Remember, it's always been bouncing off about 120, 122, right around that zone 3-4 area, like right there. Just kept bouncing and bouncing and bouncing. So, I mean, we definitely got the market going up, but it was like right before we started to, but again, very bouncy, choppy vol lower, but just mostly the market grinding higher. And I think that's really mostly what I remember from the summer because it started that long, like that insane QQQ rally that we had.
Yeah, insanity indeed. It got out to September 11th. Let's see, markets were mixed that week. Spikes and VIX cash both at about 27 3/4, both down from a little bit higher levels the week before. They're both down about 4 to 5 points from the week before. So both of them had been over 30 the previous week, back down in the high 20 levels. VVIX still clinging to near that 120 level, 117 or so, down about 7 points as well. VIX futures curve was getting backward again. That election premium actually looking a little bit lighter. The no future is only 3 points premium. Of course, a lot of that was because the cash was just getting insane again, and that tends to mitigate things a little bit. Also, some vol still out there in jam, a little bit worrying maybe of a, shall we say, disputed election out there. The top position in VIX was 173,000 of the SEP 20 puts. VXX was at a 26 even, down nearly 6 points from the previous show. And let's see, everyone was talking about your calls in NASDAQ, Mr. Rock Lobster. Everyone was talking about the impact of the SoftBank whale that was on everybody's mind back there in late August into September. We also launched our great GameStop versus Bed Bath & Beyond debate on the option block, which is still raging in some degree. And also that month, September, the options industry as a whole surpassed the previous 1 year total record by September. They had already done a year's worth of volume by September. They hit 670.9 million contracts. That surpassed the level they hit back in 2018. So they did a record year's worth of paper by September of this year. So that shows kind of what insane year it was. Let's get out to October now as well. October 9th is our next stopping point on our volatility journey. That week, the markets were green. There was a lot of nonsense in the air. Pelosi was threatening to create a commission on presidential capacity. to determine whether the president was fit for office. The markets were kind of laughing all that off. Everything was green. Spikes and VIX cash are at 25 even, both down multiple handles from the previous week. VVIX back down to 108, so threatening the 100 level again. And the VIX futures curve looking pretty normal again. The no future still close to 5 points, about 4.25 points over the cash. Jan looking about 3 points juicy. The top VIX position, the October 28 put, 150,000 of those. VXX was at 22.5, down about 3.5 points from the last show. The top position out there was the Nove 30 calls, actually, changing up a little bit, 30,000 of those bad boys. Mr. Rock Lobster, anything resonate to you in the September and October timeframe, sir?
Well, yeah. Remember that pesky election premium?
Never heard of it. What are you talking about?
Never. That's like, wow. And it never went away. It held there forever. That back month stayed up, and everybody was worried about the election because they all thought something crazy was going to happen. And, just apparently the only thing I can tell right now is just somehow there was a heck of a lot of votes cast. That's all I know. There was a lot of votes cast. And then we all know what happened. I don't want to spoil the next month, but we know what happened to the vol right after that election. But
dude, huge spoiler alert. What are you doing? We haven't gotten there yet.
Peak vol in October. Peak vol.
Spoilers for the U.S. election, listeners. If you haven't watched it yet, then blame the Rock Lobster for spoiling it for you. All right. So, yeah, a lot of craziness. We asked you some cool vol polls about how you like to trade vol. Back then, you guys prefer your direct methods, your SPX and SPYs, then 61% versus your vol products or your vol ETPs. All right, getting out to the month that the Rock Lobster just spoiled, November. We hung our hats now, November 6th of that year, so right after the election, right after our big election night special that so many of you guys enjoyed, and gals out there. And it seemed like we maybe had a result from the election that Friday. It wasn't quite so sure. Things were trending Biden, but there was a lot of Sturm und Drang going on around the country. Spikes and VIX cash both at around a 26. They were down nearly 13 points from just the week before, so a lot of that election juice did get squeezed out of the sponge there. VVIX at 113 down, get this, 36.5 points. So did they come for the vol pre and post election? Yeah, they did, which is weird because on election night, even though I've listened to our special, they jacked the hell out of this thing when Trump seemed like he was winning in terms of vol and indeed of the futures. And they crushed it when Biden seemed like he was trending in that direction. And then everything kind of reversed after the dust settled out there. VIX futures cash was back to Contango, had lost all of its bid. The no future was effectively the cash at that point, only a quarter point difference. So all of that juicy election premium wrung out of the sponge there as well. The top VIX position out there, 233,000 of the D's 23 puts. So once again, it was only one call in the top 10 there that month. And it was not the D's 23 puts. I don't have what it is here. VXX was at 20.75, down nearly 6 points. The top position out there was the Jan 15 puts. And let's just get these last two together, and then we gotta roll here. Then we gotta get the last two into D's here. Last show we're gonna stop at for the year, December 11th of this year, big day, 24.5 on Spikes and VIX. Markets were selling off. Why was it a big day? Because the Spikes futures came back. Something you guys have been asking us pretty much the entirety of 2020. They're back, baby. They launched on December 10th, and they're actually doing some paper. Spikes options doing some paper as well. As of that show, the number one position in in VIX options, 302,000 of the D's 20 puts. VXX was at 18.25, actually up a point and a quarter. And let's see. And people were saying in our polls that valuation and sell-off fears is what was keeping volatility elevated. All right, Mr. Rock Lobster, anything you want to add about November and December, sir?
Yeah, just November. November came. Election, they crushed the vol huge. 30, what was that? Almost 40 to almost 20. And a week after the election, you had this vaccine thing. Just miraculously, nobody knew about it, but it miraculously somehow there was like zero information. And then 1 week after the election, the vaccine apparently was highly effective. And then we got a slew of, but now we have 3 vaccines. So, but interestingly enough, VIX has not been able to stay in zone 3. It keeps going back to zone 4, back and forth still. So even with this vaccine, even with multiple vaccines, even with the election kind of figured out, so all the things that caused the vol, you think this vaccine would start bringing the vol in a little bit. We have not gotten below the vol lows when the vaccine was announced, which I find interesting. And the only thing I can think about when we talk no D's, and I only have a couple minutes left, is, just where are we today? So we'll get to that, but that's what I saw for Nov and D's. It's just you had those two events that I thought would be huge vol into the teens, and it just did not happen. So there is another force lurking, which will reveal himself. And I know you like it when I say that because it reminds you of Star Wars, but
yes,
the Dark Lord has not quite revealed itself yet.
The Dark Lord of the Vol Sith has not yet revealed himself. I think we'll have to table our discussions of the guest of the year. I think there's one clear winner. We'll maybe get to that on a future show. Trades/trends of the year that you guys noticed, probably have to table that as well. So give us some more future discussion to talk about on our first show back in the next year, because now we have to get to the difficult, the dangerous part, Mr. Rock Lobster. It is time for our final crystal ball of 2020.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, we thought for this year, let's end it in style the way we used to. We didn't do it last year for some reason. I'm not sure. Other things were conspiring out there, but we thought let's assume a return to somewhat normal levels, or maybe not. You can choose that as well out there. Where do you think VIX/spikes will close at the end of next year? And I know all the arguments for seasonality and taking an average throughout the year and all that other nonsense. Toss them out the window because they're going end of the year anyway. That's just what I've decided with my dictatorial powers. And so we asked you quite simply, where do you think VIX and spikes are going to close for 2021? You guys can send in your specific predictions to win potentially fabulous prizes. We gave you our usual 4 ranges, maybe tweaked a little bit, but not that much. We gave you the low point, so listen to this. 8, a single-digit VIX. Doesn't that sound quaint again? To 11.99, or normal, the quote-unquote normal range of around 12 to 16.99. Elevated, so that'd be 17 to 23, which is still shy of pretty much almost of where we are right now. Or what we used to call very high. Now we're calling it pandemic. And that's north of 23. That's not to say the pandemic will still be raging, hopefully, but just there will be a lot of pandemic level vol out there. Mr. Rock Lobster, the folks are already voting out there. If you're listening on the podcast, you should have some time. This goes for, I think, about the rest of the day, so you'll have time to get in there and make your voice heard. But Mr. Rock Lobster, first off, do you concur that these ranges are still relevant, or should we maybe have tweaked them given the madness that was 2020? And then B, what is your prognostication? And then C, what do you think our audience is voting for, sir?
Well, I think the ranges are good because it's still basically the VIX quartiles. You took my VIX zones and you white label them. You white label them right in front of
I take umbrage at your accusations, so those were independently created.
Yeah. Well, they look very similar, anyway.
You know the old saying, you can always tell a genius because he thinks exactly like you.
Yeah. I still think they're fair. I think this year, though, the quartiles are still as good as any. I do not think we're going to be in zone 4. I think we're going to be back to somewhat sort of normalcy. So I'm going to say zone 2, 12 to 17.
All right, I'm going to hold off on voting just yet because I don't want to color our response. Maybe I'll give my number next week here on the show because we still have some year in reviews to do. So far, how the voting is shaping up, Mr. Rock Lobster. We've got 40% saying elevated, 17 to 23, which is not that far from where we are right now. So that's certainly understandable. 26 points, actually a tie for number 2. 26.7% each for the pandemic level, north of 23, which I hope is not correct. And then the normal level of 12 to 16.99. And then only 6.7% so far can fathom a single-digit vol in the 8 to 11.99 level. Folks are already chiming in. John Wagner saying he thinks it'll be higher because Tesla is now in the S&P and it is extremely overvalued. So much expectation built in for the future. Hopefully nothing goes wrong. So that is translating for him into a higher VIX level next year. Interesting how all of this works out. Unfortunately, that music means we've come to the end of it. I blame the Rock Lobster. He hijacked the first 10 minutes of the show with his love of Bitcoin. I couldn't stop him, listeners. It's all his fault. So, he's a Bitcoin maniac.
Crossover for you.
He's a Bitcoin maniac now. But yeah, fun stuff afoot. There's even more we could parse here. Let us know what some of your thoughts are. Trades and trends of the year that you noticed. Maybe some guests that really resonated or perhaps didn't resonate with you. Out there, I have one for the latter category that I think is kind of interesting. All the other things. You want to play in our crystal ball? Have at it. You guys know where to find us. We're not done yet reviewing the year. Yeah, OB still has to do it. TWIFO, we got one coming up in about exactly 27 minutes to do all that on the futures options side of the fence. Spoiler alert. I should bring the Rock Lobster back on. It's going to be a lot of Bitcoin talk on that one. That one's dominating the tape over there at CME this year. But before we go, Mr. Rock Lobster, because you were kind enough to review the year that was with me, if folks are intrigued, they want to learn more about all these things we talked about this year, maybe they want to contact you and have their own discussion about the evolution of volatility throughout the madness of 2020, where should they go? What should they do?
Go to optionsbit.com, go to memberships, and find out all the goodies we have.
And before our listeners ask, we did not have a crystal ball for this week. Our predictions were actually for January 8th, listeners. And if we look to those, what do we pick for those levels? So far on the January 8th levels, I was at 23.05. Mr. Rock Lobster, you were at 19 for January 8th. And Tom Jark was on with us. It was at 23.95. So those are our levels for coming up a week or so hence from now. We'll see. Georgia runoff will be in the rearview mirrors. Maybe a little bit of a different story. By the way, if you were wondering what we were predicting for the end of this year for vol, I'll go a little long. Why not? We predicted it on some of our other shows on this one, and we all were leaning. I was at a 12 double. The Meatball was at a 14.10, and Mr. Rock Lobster, you were at a 14.92. That's what you were feeling at the end of last year for the end of this year. I think it's safe to say, sir, we were all woefully incorrect.
We were all woeful, but I was least incorrect.
By a small, some might say negligible margin, you were the least incorrect, yes. You just went the Columbus. That's why you guessed 14.92. You went the old Columbus.
I totally went the Columbus. Yep.
Honoring your Italian heritage there. So a lot of good stuff. We'll touch on this more on future episodes. Remember, if you want to learn more about all things spikes, myxoptions.com/spikes is the place to go for that. You want to learn more about everything Matrix has cooking, matrixexecutions.com is the place to go. Remember, hit these folks up, follow them on Twitter, send them thanks for sponsoring the show. They are the reason you guys get a free ball show every week. So give them a little bit of love here to end the year. Thank them for helping to bring the show to you pretty much throughout the mad year. If ever there was a year where you needed a Volatility Views, it was this year, and it came to you courtesy of those folks. So give them some love out there while you're listening to the program. Send some love over the Rock Lobster's way as well. He can use it. He's a diehard Maine cynic. And on behalf of the Rock Lobster and the Greasy Meatball, I'm sure he'll be back with us next week to give his thoughts on all things 2020. And, of course, everyone over there in the land of MyX and everybody over there at Matrix, as well as everyone who joined us on the program, all of our guests this year. You were all fantastic in your own ways, some more than others. And, of course, to all of you who downloaded, streamed, and subscribed and sent in questions and voted in our polls and really kept the show churning. So many more of you than ever. We love you all. This is the first year I can remember where so many episodes of Vol Views are in the top 10 for our network for the year. How crazy is that? This show started off aimed at professional ball traders, and look how it's grown. Fascinating times. We'll see you back here a little bit later for TWIFO, and then back again next week for another Volatility Views.
Volatility Views is brought to you by MyX, one of the fastest options platforms in the world. MyX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.myxoptions.com. matrixexecutionsLLC.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.